Hi everyone, welcome to Single Value. So today we're looking at Chindata Group. This is a company that came on to the market with that IPO pricing of 13.50. It is now at 19.13, giving a valuation of $6.87 billion. So if you've owned this company in a very short amount of time, you would have made a decent gain. This company raised about $540 million at its IPO, and it had a valuation of 4.9, but of course it has risen to 6.87 right now. So yeah, this is a company that has ByteDance as its largest customer. ByteDance makes up 81.6% of its revenue. If you don't know who ByteDance is, they are the parent company of TikTok. But of course, they have quite an array of apps in China, and they mainly use Chindata as their data presenter provider. So so Chindata is providing hyperscale data centers, and so far they're doing fairly well. Like if we look at their portfolio recently, they had this presentation for the Q3 results. The capacity is 248 megawatts. This is usually the metric they use for data centers. Since it's kind of like a very generic operation, you buy a large piece of land, you put some service there, you have your power coming in, your cooling, and yeah, basically you just in a way you're just renting out, just like how you rent out a house. They build a lot of servers and they rent out their servers, hence their data centers, right? So in a way, it's a very generic operation that they just focus on expanding as fast as possible. And the more you expand, the more you make, in a sense. Just like if you're going to real estate, the more houses you buy, the more money you make. And this is how it's going. Of course, data centers are actually much more profitable. So hence why they can actually scale quite quickly with a big amount of cash coming in. They just continue to use cash to continue to build outwards, and yeah, hopefully this company can become much larger in the future. Of course, they do have a really nice backlog of construction. So the current capacity is 248, but they do have another 226 of megawatts under construction, which will nearly double what the current capacity is, which is the thing you look forward to. Like, there's a nice growth company. They also have their own patents, 194 patents or patents pending. So they are expanding to India with their first 20 megawatt operation. 10 megawatts, which is half of it, has already been contracted to a customer. They do have a data center in Malaysia as well. But I think so far they have just proven that China is their largest operation, and they will continue to expand in China, particularly at the speed which you can build a data center in China. I think it takes them about 6 months to build a 36 megawatt data center. So every 6 months, this company will minimum expand by 15% at their current capacity, if they can continue to build data centers like that, which they are. So we can kind of look at their data centers right now: 248 capacity, 226 being built. So yeah, they have a 40 megawatt data center coming in at the end of this quarter, and then another 23 one coming at the end of the quarter. Another 18 is also coming this quarter. So over 80 megawatts is coming in this quarter itself. So that's a over 30% increase on their current capacity just in this quarter itself. Well, in the fourth quarter, not the third quarter, which is for the results we're looking at. So in the fourth quarter, they have about a over 30% increase. And in next year, they'll continue to build out. So it doesn't show much coming in next year. They do have a 20 megawatt one, and also a 23 megawatt. So again, if it only takes them 6 months to scale an operation, then very much they can decide next year that they want to continue to build, particularly now that they've raised $500 million. They can continue to build as many more, and I think this company is going to grow at a very nice pace. If we look at their third quarter data, their results, their revenues grew at 64.5%, and I think they can continue around this rate of growth, if not like within that 50 to 60% growth rate. The the quarter revenue was about 68.9%. So this year they're probably aiming around 200 million in revenue. Though if we look at their market valuation of 6.87, that is a fairly high valuation. But in a sense, they are justifying this valuation. Though I wouldn't buy in if you're just a short-term holder. I think you have to be at least a 6 to 12 month holder minimum to really see the upsides of this company, because in the next 6 months, this company is going to increase the capacity by about 50%. And probably in the next 12 months, we'll probably see, like maybe 60 to 70% increase, with more coming in 2022. So I think this company is able to consistently grow, and you'll probably see it in the share price over that time. But of course, the share price has risen fairly quickly in the last 3-4 weeks, so there might be a little drop to compensate for profit taking. But I think even at this current pricing here, if you're a long-term holder, you still stand to make a decent gain. It won't be like a real substantial gain, because it's not like the other software companies that can just scale the operations by selling more software. These guys do have to build their data centers. It does mean these guys are more stable in a sense, and the risk is a bit lower than, say, like going into software. But of course, like it takes a lot of time. If it takes them about 6 months to build out a data center, then basically, you're going to have to wait 6 months to really see the upside for this company. So we kind of see like 6 months to build a 36 watt power a data center, which they need power, a good network, land banking. They kind of like make a nice kind of like I guess like measure on these resources. So they measure the demand for the data centers. So in China, it's like 5 stars, network connectivity 5 stars, power supply 5 stars, land banking 5 stars. Of course, and when we go to India, the resources aren't as good, but still pretty good. Like data center demand in India is quite large, particularly now that everyone's hopping onto like the internet. And in like network connectivity is about 4 stars, power supply is 4 stars. To give you like an idea of how much power these data centers use, kind of on average, like 100 megawatt data center would use enough power that to power 80,000 houses. So the 248 would mean that the power that they use would probably be enough to power over 200,000 houses. So that kind of gives you an idea of the operation and scale needed to do this. So hence, when we look at something like power supply and they give it 4 stars, they're saying is a great opportunity for the power supply, but it's not as great as like it. Like I guess there's still some deficiencies, which they for the operation in China they don't really notice that. But India they do notice that the power supply network connectivity isn't great, as in China, but still good enough to continue to expand in a big way. Land banking, like these data centers require a lot of land. So you can kind of imagine like these are like large buildings, kind of like factory-like buildings. So you need a lot of land. So hence why the land banking is a key point to look into as well. We look into Malaysia. Malaysia kind of suffers from a very similar situation. So land banking, Malaysia doesn't have as much land. Since in the future, if they expand to Singapore as well, they're probably likely to have that similar problem as well. Power supply is also 4 stars. Data center demand is also 4 stars. Network connectivity is 5 stars. So you can kind of see like in China and India, there's a much bigger need for data centers. Power supply is a big need for the company to run their operations, and then they also have their backup generators in case that power supply ever runs into trouble, and they need to find a place that's cool enough so that the data centers itself, which generate a lot of heat, can be cooled down in an appropriate way. And of course, you need a lot of land. So yeah, like this is certainly interesting to me. Like I think because it's such a like a long term hold. Like it's something that I'd be interested to buy a little bit in, but like I probably wouldn't want to buy like a lot. And that, but that's just me, of course. I tend to like things that grow even quicker. But 60% growth in the revenues itself is pretty decent. I do like the operation itself. I just think the share price is quite high, that you would have to justify a 6 to 12 month hold to really justify this. But if the share price was lower, then it'd be more interesting to me, of course, because I think the gain itself over 12 months will be nice. But of course, I feel like there's still other opportunities that probably could go quicker. So hence why I'd probably invest a little bit, but for me personally, I wouldn't. I don't really want to invest like a lot, but I still like this company very much. But of course, if you'd like this kind of company, which is very stable, lower in risk, um, particularly when compared to like tech companies selling software, then this company certainly would pique your interest, of course. Let me know if you've got any questions or any comments. Just post them below. Always interested in those. Until then, good luck investing.